And with the 2023 Academy Awards just around the corner, we're pulling in to focus the future of the movie theater scene and what's at play for the box office in the year ahead. Here to reel in all the details is Chad Beynon, Macquarie Senior Gaming, Lodging and Theaters Analyst, along with Yahoo Finance's Alexandra Canal. Thank you for being here today, Chad. Let me just ask you, what are your expectations for Sunday?
Sure. Thanks, Jared. Thanks, Allie. Expectations. Well, obviously, as you just talked about, I think, viewership has increased. There's a good mix in terms of the big blockbusters and then also kind of the specialty art house types of movies. So my expectation is after March Madness Election Sunday at 6 o'clock, I think there's going to be a lot of people that kind of stay over, continue to watch TV into the 8 o'clock Oscars, and obviously a red carpet show prior to that. In terms of winners, I'm not going to state my picks there. I have been able to see a lot of these movies, and I think we are seeing people continuing to go back to the theater, and that was evidenced in the January and February results.
And Chad, let's pick up on that. You say people are going back to the theater, but you did trim your forecast for 2023 box office revenues by 10% to $8.4 billion. What was the biggest driver in that decision? And when do you think the box office can reach those pre-pandemic levels again, if at all?
Sure. Yeah, I'd say in terms of blockbuster quantity, we're going to be back to about 85% of pre-pandemic in 2023. A lot of that is more weighted to the second, third, and fourth quarter, but it's nice to see that the amount of product has kind of recovered here. 2022 is back to about 65%. So we have a nice year-over-year increase. Really, our move in terms of estimates has really been on kind of the specialty art house, non-blockbuster movies. We're just not seeing the results, as you kind of mentioned at the outset, with some of these movies that really receive good ratings, but just aren't getting the same footfall and admission revenue as we had seen in prior years. So we took a little bit more of a conservative view on those non-blockbusters, which usually account for about 40% of total box office for the year.
Variable pricing has been a big conversation on both Wall Street and Main Street. We actually spoke to IMAX CEO Rich Gelfond earlier this week. He said he's not a fan. What do you think? Do you think this could add incremental revenue for theaters, or is it too risky of a bet given the macro environment right now?
Yeah, it's a good question. It is tricky because you're essentially penalizing the people that are kind of keeping the business intact. These are the core moviegoers who kind of show up, 6 to 12 times per year to see some of the great product that's out there. So to penalize them just in a higher inflationary market, at times doesn't seem great. There's certainly markets and times where they're able to increase pricing. A lot of the improvement versus 2019 has come through pricing. Some of the companies have the subscription model or a discounted model where you do get a set number of movie attendance opportunities in a month or a year, and you can go in at a 10 to 20% discount. I'm not a huge fan of the dynamic pricing, obviously, with everything that's going on with the consumer. What we have seen in prior recessionary cycles is this industry holds up. But this is a tricky one. If you continue to raise pricing, that kind of could force some people to decide to sit on their couch instead of coming out to see some of these movies in the big screen.
And I want to ask you about AMC and how you're seeing all of this play out with the company. You recommend the stock with an underperform $7.61 price target and a critical meeting this Tuesday. Shareholders are going to vote in a special meeting on whether or not to increase the amount of authorized shares and also do a 10-to-1 reverse split. Anything there that you think might be eye-catching or significant?
Sure. Thanks, Jared. Well, first off, we really like where IMAX is positioned here. We have a $22 price target. Our second favorite pick is Cinemark. We have a $15 price target. Stock has moved here over the past couple of weeks. In terms of AMC, I mean, look, they are continuing to do things that helps their cash flow position or cash position, as I should say. Raising equity would certainly be one of those items. In terms of the performance, we're kind of lukewarm in terms of what they can generate in 23, 24. Ali, you asked if the industry will get back to pre-pandemic levels. In our model, we don't have that happening. In 2024, I think we have it getting back to about still a 10 or 15% decline versus pre-pandemic levels. So for a company like AMC with higher inflationary labor and utility costs, higher rents, and overall lower margin, it's just hard for us to justify anything other than our current rating. In terms of the upcoming meeting, we want them to win. We want every company in the space to survive, to thrive, to continue to offer this to consumers nationwide and worldwide. So we're hoping that this does work out, but it's been a very difficult position just because of the debt and the lease obligations that they have on their balance sheet.
Chad, I'm pulling for them too. Hope they pull it out in the end. And thank you for all your insights here. Macquarie's Chad Beynon, along with Yahoo Finance's Ali Canal.